afternoon, ladies and gentlemen. Welcome to the Arabian second aviation session for this year's event. I'm John Strickland from JLS Consulting. I'm delighted that today we're going to be having an interview with His Excellency Akbar, Group Chief Executive of Qatar Airways. He's running a few minutes later. This was something that we had to pre-plan because he's just come from an event out at Dubai Airport, but he will be with us in a few minutes. He's just actually passing by the Qatar Airways stand. So I'm going to be given a thumbs up by my colleagues when he's here in the theatre, so we'll kick off at that moment. But rather than stand here with nothing to say, I did have a few slides as a kind of plan B. So what I'll do, I'll just quickly run through a few slides commenting about the context in which Qatar finds itself, a quick overview of aviation today. And as soon as Akbar arrives, then I will stop the slides. But in the meantime, if my slides provoke any questions or comments, do feel free to put them in. So if I can just get my slides on the side screen. We'll have a quick look at the outlook of what is happening to airlines today, globally and in the Gulf. Fuel prices have gone down in recent months. Is that a good thing or a bad thing? Security is a big challenge for airlines all over the world today. What impact is it having on different airlines and their business success? We have new generation aircraft coming in. That's something which is very important to Qatar Airways themselves. And we'll take a quick look at some of the key players here in the Gulf and in the old world, if you like, back in Europe. And we maybe have time to quickly touch on regulatory changes in Europe which have an impact for Gulf carriers and possibly even onto the long-haul low-cost model. Well, fuel prices are a double-edged sword. Those of you who were here earlier when I was talking with Paul Byrne will know from an airline point of view, falling fuel prices can be a good thing in terms of reduced costs, but not always one which airlines get an immediate benefit from, because quite often airlines will buy fuel in advance at a fixed price, so even if the market price goes down, they find they still have to pay their agreed contract price. And the other side of the coin is that while fuel prices have been going down, many airlines have been giving these reductions back in terms of reduced fares. Some flights which might have been cancelled in the past because fuel prices were too high are maintained. In some parts of the world we see excess capacity, and airlines are discounting their prices to attract more customers. So a lot of this fuel price reduction is, when we look at airline financial results, given back in discounts. If we look at security, sadly we live in a world where security has been for a number of years a serious issue as far as aviation is concerned, and it will continue to be so. In the last year or two we've seen in many respects tourism to parts of Egypt really badly damaged because of terror attacks. The same applies in Tunisia. Even in Europe, recently tourism in France was hit very badly after attacks in Paris at the end of last year. And currently Belgium is seeing really a paralysis in tourism into Brussels as a result of the bombing at Brussels Airport and the Brussels Metro a few weeks ago. This is something really which airlines have to deal with. If business dries up, the lifeblood is gone for many airlines, and it can indeed put some airlines out of business. It means that there has to be very good airline management which is really focused on managing costs and putting money away for a rainy day, because those rainy days can be arriving quite unexpectedly and quite often when it comes to security. We see some examples here of the big European airline EasyJet talking about the impact on their Egyptian business and Parisian business, bringing load factors and revenues down, and Air France KLM talking about the impact in the French and North African market. New generation aircraft are really a key part of the landscape today. We're going to have a panel this afternoon where we're going to have Boeing and Airbus with us at 2:30 in the Tech Theatre talking about the new technology that's coming into aircraft. Well, these aircraft, such as the Boeing 787 and the A350, we've had panels and discussions in the last few years here at the ATM where we've talked about what would be the impact of these aircraft coming into service. They both now are in service. Amazingly, the 787 has been in service, I think, about 4 years now, and the A350 certainly over the last year with Qatar Airways, who will be talking to one of the lead airlines of the world for introducing that aircraft type. This has allowed airlines to open up some new direct routes and to improve fuel economy in terms of their operations day to day and sustain new airline operations, and Qatar again has taken the lead in that. In the short-haul market, we have new offers from Boeing and Airbus. Airbus has the A320neo. Neo stands for new engine option. That aircraft is about 20% more fuel efficient than its predecessors. Boeing's also got a new version currently under flight test. It's not yet in service, the Boeing 737 MAX. The 320neo has just gone into service recently with Lufthansa in Europe and has had a number of teething problems, and we've heard from the group CEO of Qatar over the last few days talking about his unhappiness about that aircraft, which Qatar has not yet introduced into service, partly because of the problems. We'll doubtless talk about that more with Mr. Akbar. And in regional jet terms as well, Bombardier, one of the big regional jet manufacturers, has been facing a number of headaches over recent years as it's developed its new C series. This is a regional jet, twin-engine jet with in the region of 100 seats. It sounds like it's going to be a very good aircraft when it comes into service, but it's had an enormous number of delays in its technical certification program, and it hasn't actually got enough orders for the long-term sustainability of that program as yet. There should be news in the next few days which may help Bombardier. There's talk with Delta, the big US carrier, may order quite a large number of these planes. So we quickly look through who are the key players. I'm going to start off quickly with the old world of Europe, where we have three big legacy groups, and then we'll look a little bit at what is happening here in the Gulf. We have Air France-KLM, which was the first big merger in Europe of two airlines some years ago. KLM, the flag carrier of the Netherlands, and Air France, of course, of France. These airlines merged in the times before the financial crisis, which began about 2008, and produced good financial results, but they faced several years of losses because the market declined, their cost structure is very high, they have all sorts of legacy cost issues and constraints in their operation in Europe. They did return to profitability in the last year, but the level of profit here, this figure of 800 million euros, is not enough for the kind of investments they're making as an airline to invest in new fleet in the years ahead. And they have a lot of problems with unions and costs, and management spending a lot of its time firefighting, trying to agree with unions about cost cutting. And if that wasn't enough, the chief executive is leaving middle of summer to become the new director general of IATA. So you could say he's leaving with a job unfinished in sorting out the company's costs. Lufthansa, the other big European legacy group, also turned in a profit in the last year. It was an improved profit. Again, it was helped by low fuel prices, but again, facing same kind of challenges as Air France-KLM. Even this week, the last couple of days, there have been strikes in Germany by ground staff at airports. Lufthansa's had multiple pilot strikes as the management tries to take on the lessons of low-cost airlines and change their model to compete with short or low-cost carriers like Ryanair in Europe. And they are critical of the Gulf carriers. Lufthansa is perhaps the most vocal critic of the Gulf carriers in Europe, claiming that these are damaging their business. But the reality is they have to cut their costs. They've set up a long-haul, low-cost airline within the Lufthansa family called Eurowings, which has either started flying to Dubai or will shortly begin flying to Dubai. But that airline only has 2 or 3 aircraft at the moment and hasn't really by any means proved itself. It's had a lot of technical and punctuality problems during the European winter months. One group which is doing very well in Europe, and they have some financial results out at the end of this week, is IAG. IAG stands for International Consolidated Airline Group. It's the parent company of British Airways and Iberia, and more recently they bought Aer Lingus, the Irish airline. This airline produced a very healthy profit for the last financial year and is looking at very high long-term profit margins, the kind of profit margins which an airline needs. One, to have money in the bank to deal with the rainy days when you have an economic downturn or you have a security problem, but equally to invest in new aircraft. And they have a big order book for some of those new generation aircraft that I mentioned earlier on. Those of you who were here earlier on would have heard Paul Byrne from Flying Ass talking about working with Willie Walsh, who is the group CEO of IAG. And he's a very cost-focused man. He turned around Aer Lingus, the Irish carrier, to a very successful, profitable player, and then later buying it, becoming part of IAG in the last year. He's actually a good personal colleague and friend of Akbar Bakar, and indeed IAG finds that Qatar is in fact a shareholder. Qatar Airways is a 10% shareholder in the group, and there's a very close collaboration there between those airlines, which I think we will see develop in the years ahead. Looking here at the Gulf carriers and talking really about what we would call the big three, it's important to understand that we see criticisms coming from the carriers in the US about the Gulf carriers damaging their business, as I mentioned we do in Europe as well. But the Gulf carriers, and I've watched them over many years that I've worked in the industry and worked for competitors of theirs in Europe, I think the simple reality is it's their moment in history. They are in the right part of the world for what is going on from a human demographic point of view in the 21st century, in terms of population growth, in terms of new market developments, with Europe and the US becoming they maybe were the leaders of the 21st century, but will not be so for the 21st century. Sitting here in the Gulf region, whether you talk about Dubai, Doha or Abu Dhabi, these carriers are perfectly placed to optimize traffic flows between the growing markets in Asia, Africa and Latin America, as well as touching some of the European and US markets as well. And they have the right aircraft to do it. The technology wasn't there in the past to fly such long-range flights as can be done today with Boeing 777s or with the capacity of the Airbus A380 and with the smaller markets, the 787 from Boeing and Airbus's A350. These markets are really ideally exploited by the Gulf carriers. If we look at customers who now want to fly from Africa to Asia, or from Asia to Latin America, the Gulf hubs are the perfect way to do it, and with the quality of service, the competitive pricing which the Gulf carriers offer, it makes it possible for them to compete very effectively in these markets with their very efficient wide-bodied aircraft. And in terms of whether they steal or do not steal the business of other airlines, the reality is also many of the markets, indeed the majority of the markets that these airlines are flying, are new markets. They've been created by the shifting dynamics of the human species on our planet and by new needs for travel which didn't exist before, and which simply do not make easy markets to serve via Europe or the US, because the geography in terms of flight routings doesn't make sense either for customers or for airline profitability. It's interesting to look back, but not much more than 10 years ago, the three airlines when Etihad had just been born, Emirates and Qatar Airways were already in business. Between them, they carried 13 million passengers. For the last year of complete data that I could get from this presentation, showing 2014, 95 million passengers now being carried by the Gulf carriers, and certainly now when we get 2015 data, I would expect that to top 100 million passengers. Really quite a phenomenal success that these carriers have delivered. And there's increasing evidence these airlines, as well as working organically to grow. They're looking at different forms of partnership with other airlines, some financial, some commercial, and a number of airlines and countries around the world are recognizing the value of working with these carriers, these big three here in the Gulf, Qatar, Emirates and Etihad, just as others are fighting against them and perhaps trying to hold on to historical patterns. We do see the strategies of these three airlines are quite divergent. Emirates is the oldest of these airlines. For those who think all these Gulf carriers have just arrived in the last couple of years, it's completely wrong. Emirates has been around 30 years now and has built its business truly organically, reaching nearly 50 million passengers in the last financial year reported, and their figures will be out in the next few weeks for the last year. They formed a very interesting partnership with Qantas, and some of you may have been here a couple of years back when we did an interview with Sir Tim Clark, President of Emirates, and Alan Joyce of Qantas. There's no financial involvement in that partnership, but it's produced very strong commercial results. It's increased Emirates' reach, particularly out in Australasia, and it's allowed Qantas to take aircraft which were losing money on a number of long-haul routes to Europe and put them into other growth markets that made more sense for them, particularly in the Asian region from Australia, but keep their presence in Europe by allowing passengers to fly from Australia to Dubai and then onto multiple destinations in Europe using Emirates aircraft. London is currently the only market in Europe where Qantas flies its own aircraft today. It's interesting, there's been a backlash, again driven by US and European carriers, to one different piece of activity which Emirates has done. They opened up a direct route, MXP, here is Malpensa Airport in Milan, and they introduced flights to New York's JFK Airport. Some airlines in the US tried to say that was damaging to their business, tried to get the traffic rights rescinded. Emirates has been successfully challenging that, and indeed that market has grown, and Emirates is probably the most successful carrier now in that city pair. But it's unusual for Emirates to do that as a standalone route beyond Dubai. They don't need the Dubai hub to make that route work, because they fly directly, of course, to New York from Dubai several times a day anyway. Qatar, well, not to preempt what we'll be talking about in a few minutes with Mr. Akbar, but it's also growing rapidly. The last full financial year they reached 26 million passengers. They've had the opening 2 years ago already of Hamad International Airport, their purpose-built hub in Doha. We'll be asking you to find out more about that. And unlike Emirates, who's remained independent other than the commercial partnership with Qantas, Qatar joined one of the three alliance groupings, the One World Alliance, a couple of years ago, and then, as I mentioned, strengthened their partnership with one of the key players in that alliance, British Airways, by an IAG, by actually investing in the IAG holding company. And interestingly, they operate all the new aircraft types available on the long-haul market today, the A380, the A350 and Boeing 787. And we expect them to be operating the A320neo during next year as well, albeit that we know from what the group CEO said in the last few days, he's not happy about what he sees as the significant teething problems of that aircraft prior to taking delivery. Etihad has a different strategy again. The youngest of the three Gulf carriers, flying 17 million, a little over 17 million passengers last year. They are trying to, in some ways, make up for lost time. They haven't had the 30 years of organic growth which Emirates has had, or the almost 20 years which Qatar has had. They have built their own hub, they have grown organically in Abu Dhabi, but they've adopted a strategy of what they call the Equity Alliance, which is to have commercial relationships with a number of other airlines, and in some cases to buy minority stakes into these other airlines. This has given them quite a lot of additional reach, for example, in markets like India with Jet Airways, and in Europe with Alitalia and Air Berlin, with the objective of increasing the feed into their Abu Dhabi hub through these partnerships, but also trying to develop more local traffic in those markets too. Perhaps the biggest challenge, it seems to me, in the Equity Alliance for Etihad is they've invested in two sizable airlines in Europe, Alitalia and Air Berlin. Both of these airlines have incurred very significant losses over recent years. It's really not by any means sure that Air Berlin would indeed still be in business today if it wasn't for the investment by Etihad. Whether they can succeed in using their management knowledge to turn that airline around and avoid it being a dead weight on the performance of Etihad, only time will tell. And the same applies to Alitalia. For those of you who are from Europe or know Europe, Italy has a number of complications in terms of its politics, in terms of the challenges of doing business because of political interference, and that has always been the problem which Alitalia has faced in the past. Alitalia has many times reached a near-death moment, and it possibly would have finally disappeared into the realms of aviation history, again, if Etihad had not invested. They've refreshed the company's livery, they've changed the onboard product. I was at a conference only 2 days ago talking with people from Alitalia in a very positive way about reshaping their network. They're introducing new long-haul destinations, for example to Beijing, over in Asia to Mexico, in Latin America, but they're still far from profitable. They've tended to have a bit of a revolving door of chief executives, quite often appointed by the government. So there's a lot of work still to do for Qatar, not for Qatar Airways, for Etihad to do if they're going to succeed in making that airline a profitable airline that doesn't occupy too much of the management time of the Etihad central management. Now, many of you will know about the allegations by the US carriers, Delta, United and American, alleging that the three Gulf carriers simply receive large government subsidies and handouts and are therefore dumping capacity into the market, which is not commercially viable and damaging their businesses. This was a complaint that was just coming to life about this time last year when we had the ATM, and we spoke to both Sir Tim Clark and Akbar about it last year. The complaint is still there, still pending. But the three Gulf carriers went into real fight-back mode. All three of them have produced very, very substantial reports, substantially longer in each case, in rebutting these allegations, and they've put those out into the public domain. They're all available for reading via the carriers' websites. Reports running to pages and pages of data showing how, from their point of view, they are creating new markets, they are run on commercial lines, whether they are state-owned or not, and really knocking any credibility from their point of view in the allegations made by the US carriers. But it's not over yet. I was listening to Sir Tim Clark on the Emirates in-flight audio coming over here. He was saying it's gone quiet, but of course the US has got many other things on its mind at the moment, not least the upcoming elections. So that itself will be a question of what will the new administration do about these complaints. From a US political point of view, it's a double-edged sword. If they were to listen to these three US carriers, which are private companies, and by the way, highly profitable, they would certainly make many other businesses and interest groups unhappy in their own country. Many airports want these Gulf carriers to come into the US. Many communities want the air service connectivity which the Gulf carriers bring. And of course, there's a little matter of Boeing as a big manufacturer and engine suppliers in the US for whom the big orders that come from the Gulf carriers produce many, many direct and indirect jobs. So it's not a simple matter of these carriers in the US getting the US government to shut it all down and step backwards from the open skies, which is the regime that they brought in some years ago. And again, as I mentioned, I think there are the issues of macroeconomic changes. Many markets which these very profitable and very successful airlines simply cannot tap into because of the geography of where they are, and possibly taking different priorities to those that are the focus of attention of the Gulf carriers. Another consideration in terms of the Gulf carriers is we've had what's called a new European aviation package come in from the European Union, where they want to, the European Union as a consortium of member states wants to foster development of aviation in Europe. They want to make Europe a leading player in the aviation arena, but they want a level playing field. Now that partly reflects the voices of Lufthansa and Air France-KLM, as I mentioned, wanting to see possible limitations on the Gulf carriers. Many say, has there ever been a level playing field? That is indeed a good question. Has there ever been a level playing field in aviation? And some of the feedback which the US carriers have got, or the American government and Europe has received from airlines such as IAG is, well, this simply has never applied. There never has been a level playing field. There never will be. This is the real world that we operate in. We have Gulf carriers running successfully. We have European carriers trying to earn their living. Don't ever expect the playing field to be regarded as a level, and how would you exactly define what a level playing field means? But certainly the EU, over recent years, has been trying to move away from bilateral negotiations where member countries set up their own air service agreements with governments around the world. In the UK, my home country, has been one of the leaders in having these air service agreements with other countries, and usually on an open skies basis, allowing airlines the commercial freedom to decide where and when they'll fly and how they'll price the product. That has not been the case in all countries. Europe's wanting to adopt that UK philosophy and have more open skies agreements. They already have one within the EU, so airlines can fly all over Europe if they are majority owned by a member state, and that's why we see airlines like EasyJet and Ryanair flying right across Europe. Even though EasyJet is a UK airline, Ryanair is an Irish airline, they can fly and base aircraft in any of the member states and price as they see fit according to the market. Well, Europe wants more of these agreements, including with Gulf states, including with the UAE at a broad European level. They've got a difficult path to follow, because it could be that in the process of trying to achieve this at a European-wide level, they will be lobbied on the one hand by the Brits, by the members of IAG to say keep it liberal, and lobbied on the other hand by potentially France or Germany to say put restrictions in place. So it's certainly something that the Gulf carriers have to be aware of in their thinking in order to navigate their way around this political challenge. And one airline model which is on the rise, but at the moment the jury is out whether this is indeed an effective model for the future of aviation, is a lot more low cost. Long-haul low-cost is trying to do, in the long-haul arena, what short-haul low-cost has done, and offer low fares based on high load factors and low prices, low cost base, using new generation aircraft like the Boeing 787 and like the A350, and take traffic from existing carriers and grow new markets. But it's not by any means a proven model. We see two big users of the model so far in the world, which are Norwegian in Europe, which has been widening its long-haul low-cost activity, not only in Europe, but in Asia and the US. And we also see AirAsia X, based out of Kuala Lumpur, doing the same thing. But neither of these airlines has made any money yet. They've invested considerably in aircraft and development. AirAsia X even changed its management entirely about a year ago to try to achieve a reduction in losses that the airline was incurring. You could say in some respects the Gulf carriers already are a kind of a long-haul low-cost operation because they have the power of their hubs to feed the passengers onto the long-haul flights, and they have lower costs of operation in this part of the world than, say, carriers do in Europe in terms of labour cost and terms and conditions and regulation about employment. The next generation aircraft are very important in resourcing this business model. So Norwegian uses the 787, the A350 is a vehicle which can do the same thing, but there's been news in the last week that Delta and Virgin, for example, in the UK, may set up their own long-haul low-cost using cheaper, old Airbus A330s. And if they do that, that will be a challenge to the existing long-haul low-cost operators. Well, very good timing, because I'm just about at the last slide, and I can see our guest for the session is just arriving at the back of the hall. So I'll just check, is that it? Anybody want to ask a quick question about that, or shall we go straight to our guest? I think we'll go straight to our guest.